You're watching The Money Show on ET now. We just had an in-depth discussion on essentially the key changes announced by Nirmala Sitharaman when it comes to tax compliance. She's made your life a bit easier, extended the dates. But when it comes to equity markets, that certainly isn't making any of our lives easier, especially if we are retail investors putting our savings, our hard-earned savings in mutual funds. NAVs have seen a crack. But is this the time to panic? Is this the time to pause your SIPs? What exactly should you be doing? Here's some advice coming in from Dhirendra Kumar, CEO of Value Research. He joins us now on the show. Hi Dhirendra, thank you so much for your time. Let's start off first with your view on this fall that we are seeing in the markets, and also an advice that you would give to all the viewers out there. How should they essentially allocate their money, their asset amidst this carnage?
No, if you had that allocation to equity thoughtlessly, if you don't need the money for five years and more, I don't think you need to do anything. But if you just were passing by the market and you invested with short-term expectation, then you have to really worry. Your money is gone, a third of it. If I look at the average return in the last 1 month, a third of your money is gone. So take out the money which you need in the near term. Whenever you can, and the rest is this is also a time to be thinking about don't borrow your money, don't borrow to invest right now. A lot of people will actually get greedy at this stage. I think we are far from there are 3-4 stages. One was recognizing that yes, this is a crisis. I think that happened about a week ago or maybe about 10 days ago. We are in a state of panic and we are far from stabilization. And if everybody, and I'm confident that at some stage, I don't know how long, I have seen 3-4 big such panic in my life so far, looking at markets in last 25-28 years. And I can tell you that we are far from that stage that people will wait, that there will be panic buying. We are far from there.
What about emergency money? How should one balance that? Because obviously there's a bit of a lockdown when it comes to accessing your cash as well. How should one balance the need for emergency money?
One is that, if you have, very small emergency fund, get some money in your bank account. Ideally, one should have 2-3 months of, the income requirement, what is needed to support your family, with little extra margin today, and maybe having some extra money in your pocket might be useful. So if somebody was extremely conservative with his emergency fund, I think it's time to get a little liberal with that. It is all completely new. Nobody could have anticipated this, so it required a little bit of preparedness. But if you had a plan, I don't think you have much to do. If you didn't have a plan and if you just invested and you are faced with this calamity, I think it is time that you revisit what you did, think about it, and work on a course correction.
Dhirendra, since morning and for the last couple of days, we've been getting advice from a lot of market experts on what we should be doing right now in the market, and many of their suggestion is that you should buy. Would you be in the same school of thought? And also, if retail investors should buy, for them, buying in the equity markets means mutual funds. So would you recommend them that they should increase their SIP amounts?
This is not the time when you should be actually planning this. The first stage is actually planning that the money which you need, the money which needs to be in your locker or the money which needs to be in your bank account, that is not for return. The rest of the money can well find its way into fixed income or equity, depending on how soon you need that money. And that has nothing to do with the state of the market. And that is the only thing which will give you the comfort. Now, depending on how you are reacting to what is happening in the market, it is a wake-up call. A lot of times, investors' thinking is malleable. It changes over time. Just about 3 months back, everybody was thinking of getting back into small caps confidently again. That may not be the case right now. So your thinking change. So this is about time, one should consider we used to be very boring in all our previous recommendations that everybody should start with a balanced fund. and they have been able to hold the guard much better. Of course, there is a decline, there is a fall, but it is not that devastating the way we are witnessing in other, narrower, concentrated, focused fund or the small caps and things like that. So I would say that just get onto the plan, revisit your plan. It has to be a very simple plan, and depending on how you are reacting to it, how experienced you are. This is a second time. If you have also witnessed 2008, a lot of people are actually taking it a little differently. But at the same time, I would say that don't wait for that recognition. The panic buying is not coming back in a hurry. We have, the crisis is still underway. We are far from any stability. So don't jump onto profit from this opportunity quickly.
We always say this too shall pass, but of course, when we are in the midst of that crisis, everything looks very gloomy, very doomy. So let's just assuage our viewers then, Dhirendra. If you could give your calming words of advice on why you believe this too shall pass.
Of course, this crisis too shall pass, but the economic devastation this crisis will cause, because this is a very unusual crisis. This did not start from the market. All our previous crises, which we are drawing inferences or recalling, is something which started in the market or in the periphery of the market. This is something which started elsewhere, and the nature of the complexion of this crisis is such that it is not a lockdown just for the health reason. It is an economic lockdown. We have to really think. So it is going to have a very lasting impact. One is impact on the economy, and it is going to have a behavioral impact, and that will be lasting. So I think and most of the times central banks and other people could intervene to cause some difference. I think all those things are not going to cause a difference. Somebody just needs to be given money to in all other things. Central banks could actually give money and kickstart the economy. Here, the central banks, even if they give you the money, but at the same time, it will be followed by the instruction that don't get out. This time, the crisis is in a fairly reverse manner, that don't get out of your home. You can't kickstart the economy in a hurry.
All right, Dhirendra, it's always great to get in your take on the mutual fund industry at this juncture, and very valuable for a lot of our viewers as well joining in. Thanks so much, Dhirendra, for your advice. Quick break on the show. When we return, we are going to be talking about tackling this menace, the coronavirus menace, with your insurance policies. Are they enough? Do you need a top-up? Do you need critical illness covers? And if so, how are you going to do that, especially when many offices are working on skeletal or almost no staff? More on that when we return.